Hello and welcome to Livewire's Outlook series for 2024. I'm Ally Selby.
And I'm James Marlay. And as the father of two young boys, I can tell you it's been a long time since I've had a good night's sleep.
So in this video, we'll be asking 12 fund managers to name the stocks that are so boring, so reliable, they'll even put Jimmy to sleep.
What's a stock that's stable, reliable, help investors sleep well at night?
Yeah, I was talking to someone earlier about sleeping. I always wake up in the middle of the night anyway, so...
Take it or leave it.
That's right. So if this is going to make me sleep better, I'm glad we talked about it. It's a nice therapy session. But I would say this is an unusual one for us. It's big cap. But I think it can be leveraged into a rising market. And I think as the year goes on, the consumer will recover too. And that is Wesfarmers. It's got a number of assets, but its main asset is Bunnings. And I think by the time we get to the back end of 24, the calendar year, we'll be talking about residential dwellings and the rate of build in Australia increasing. We've hit bottom or are going through bottom, and Bunnings is a good leverage, well run, number one in its industry, all that kind of stuff.
It's either between Telstra and Woolworths. They're the two that I always fall back to. But
They'll definitely put you to sleep.
Yeah, exactly. Telstra, I think, for me, looks like an incredibly safe company, actually experiencing growth for the first time in a long period post the unwind of the NBN. So for me, that looks like a great sleep at night company and should be yielding, better than term deposits next year.
Well, I mean, even telling you about this stock is going to put people to sleep. So it's a very sleep at night stock. It's very boring. Waypoint REIT. So they own over 400 service stations. They own the land up and down the East Coast metropolitan service stations. Their anchor tenant is Viva Energy, which is also listed. So, it's nearly 7% dividend yield. It's trading at a 20% discount to NTA. And this is proper NTA, proper property backing, not, office where people are too scared to properly devalue it. Proper NTA. So you're going to get 7%. So, sleep at night with respect to that. You also get upside if we are closer to the end than the start on the interest rate rise cycle, then, the REIT sector is going to fly and Waypoint will go with it. So that's one that I think, it's boring, but boring can be beautiful over time.
Look, there's one I'd call out here is Centennial Industrial REIT. The REIT space is a space that we're typically not big investors in, but we're probably the most overweight in the REIT space we've been since the GFC. We're seeing enormous value right now, companies trading at 20-40% discounts to NTA. So CIP is the code, CIP. It's the largest pure play industrial REIT listed on the ASX, capped at $2 billion. It's trading at about a 20% discount to NTA, yielding just over 5%. So we believe that when you compare that to, say, cash in the bank, you're getting a superior return on your distribution. Plus you've got the NTA upside, we believe, over the next few years as the interest rate environment continues to normalise, and we think that the overall REIT space can certainly be a big outperformer in 2024 for that reason.
You don't buy microcaps to sleep at night, that's for sure, but I would say a company like Ridley Corporation, it's a great compounding business, they've got some fantastic assets, they're continuing to optimise those assets, and we think that that's a stock that it's growing its earnings well, it's paying a good dividend yield, and it's something that will just continue to compound through time.
Is there one stock that you think can help investors rest easy at night, better than a term deposit or leaving their cash in the bank at the moment?
So I think, it is probably a bit of a cheeky question. We're trying to invest in stocks, and I would say, stocks are going to generally have more volatility, obviously, than a term deposit. But I think what you're really asking about is defensiveness. And I think one of the things that can really protect you as a stock market investor is valuation. So if you are able to buy something, don't overpay for something, then that does provide you some safety in your ability to sleep at night. So instead of buying a term deposit at a bank, how about you buy a bank like ING? That's a stock that's trading on 5.5 times forward multiple. It's got an 8% dividend yield for the next few years, and they're actually overcapitalised to the tune of 15%. Which means over the next 2 years, they're likely to pay shareholders back 45% of their capital base. That's well in excess of that 5% term deposit. And again, that valuation being really discounted, it's going to give you that downside protection as well.
Mark, what's the one stock that you think can help investors sleep well at night in 2024?
In the spirit of Christmas, I've got two stocks for you. The first one is EVT Limited, which is an operator of hotels and cinemas across Australia and New Zealand. It has a significant property backing on the balance sheet and it's trading below that value. So from a valuation point of view, it looks very compelling. You're essentially getting the operating earnings of the business for free, which we think is very attractive. It's on a grossed up dividend yield of close to 6% as well, which we think is quite attractive. And CQR, or Charter Hall Retail Group, is another one which I think is really interesting from a safe pair of hands point of view. Trading at a 30% discount to its asset backing or book value. Dividend yield of over 7% grossed up, which again is very attractive in this market. And a very strong, resilient group of tenants and retail neighbourhood assets in the portfolio as well, which we think are very attractive.
I think Synopsys is a company that you can sleep well at night. It provides EDA tools, electronic design automation tools for semiconductor companies. You know, the beauty of the name is that actually it's tied to R&D spend, so you don't have the sort of cyclical nature than you know, companies which are actually in the manufacturing of semiconductor companies. I think it's great because, you know, with AI, you need more complex chips, and Synopsys is at the heart of that.
It's one we've spoken about before, be Visa, I think, for me. Business has reset since COVID. It's just had its annual result. It's guiding next year to low double-digit revenue growth. It's got fantastic margins in the mid-60s, you know, terrific cash flow, good secular growth there, and the multiple's not particularly demanding, around 25 times forward earnings. So that's probably, I think, our sleep easy at night stock at the moment.
Yeah, we tend to like companies that are controlling their own destiny. So if they're doing something that's beyond those macro factors, that's a good thing. So one we quite like is De Grey Mining, and they've found over 10 million ounces of gold in Western Australia, and that's being developed and it'll be quite profitable when they get to it. And that's the sort of asset that major gold companies will be coveting, and hopefully, you know, we should lead to a takeover at some stage, although we don't invest for that reason, but it's that quality of asset that people will want it. They're managing to layer up their optionality by leases that are concurrent with other lithium players. So they've just announced, hey, look, we might be lithium as well. So we might get some optionality at that lithium exploration as well.
Microsoft. So I did some analysis on this. If you look at 1 year, 3 year, 5 year, 10 year, 20 year, and 30 year annualized returns for Microsoft, they are all above 5%. So it is very rare that if you are a buy and hold investor that you would generate less than 5% over the long term by holding Microsoft. Microsoft, from a stock specifics perspective, it's one of the biggest holdings in our portfolio. It's in an earnings upgrade cycle, extremely high quality, fortress balance sheet, high ROE, and one of the best management teams in the world. So I'd hold Microsoft over term deposit any day.
There is no stock that's better or safer than a term deposit. But let me just mention two in our portfolio that perhaps get vaguely close. One of them we like is Atlas Roads. You know, it's got a forward dividend yield of about 7%. And you know, it's not going to grow that very much, and there's some risks around the French tax rate and all that sort of thing. But you know, it's a very safe stock. It's a concession to toll road operator, right? And another one in our portfolio is Horizon, which is the Queensland rail business. It's got a forward yield of about 6% odd, and it can grow that. And again, it's a mostly regulated business. So if there is any sort of economic turbulence, these stocks are going to be safe.
Both of those are better than a TD right now.
They're better than a TD in terms of yield, but they're not risk-free. No stocks ever are, Airlie.